Dear viewers, it's a pleasure to host Mr. Ambareesh Baliga, a market analyst and an independent consultant today. Ambareesh provides consultation to mid and small entrepreneurs in their business strategy and also assists in raising funds, especially equity. Friends, please subscribe to our YouTube channel for stock market related videos and interviews of industry experts. Welcome, Mr. Baliga. It's a privilege to have you grace our listeners today with your valuable insights. I hope you're healthy and safe.
Yeah, thanks, Shweta, for your kind introduction. And yes, we are keeping ourselves decently safe by staying at home. And I just hope that everyone follows this protocol so that we are done with COVID as soon as possible.
Yes, very true, sir. So let me start with the broader perspective first. So, what is your outlook for the markets in FY22?
Shweta, in fact, I may be among those very few people who are not too bullish on FY22. So let me start from the first wave of the pandemic last year. Though it had struck very few people to start off with, maybe a couple of hundreds when we had the first lockdown. To be precise, I think we had 562 active cases in India, about 375,000 cases globally, about 16,000 people had died by then, out of which 13 had died in India. But it was clearly the fear of unknown. Everyone, including the government, clearly was clueless at that point of time. We knew it was a deadly pandemic. We didn't know what were the chances of survival. All that we were aware of, that the sort of panic which was being created in the social media through those various videos and messages which I think each of us got at that point of time. So, what we saw was an immediate lockdown, and that too, this was for the first time. Though many of us have seen bunds and all that in the past, but we had never seen a complete lockdown. So clearly, we were staring at an uncertain future. Naturally, the markets collapsed because markets are there for the survivors. And here we didn't know as to how many of us would survive post this pandemic. So that's the panic. And stocks touched their unthinkable valuations. Today, when you look back, it was mouth-watering and clearly a no-brainer for anyone to buy at that point of time. But I don't think many of us really had that conviction at that point of time, nor the courage to buy. So when you're in the midst of an extreme sort of a situation, it clearly overwhelms you completely. But then as time passed, we realized that the survival rate is good. Within 3 months, we had more economic activity starting off. Government came up with a series of sentiment booster packages. It seemed that India will come out of this pandemic much stronger. And we also had that anti-China sentiment. That also worked in our favor. So thankfully, the emotional health of the country at that point of time was not broken.
Right.
And with the economy opening up, we had a huge pent-up demand. People were tired of sitting at home. So those who continued to have that source of income had really a surplus, since there were not many avenues to spend during the pandemic. So naturally, we saw a burst of demand, which continued through the festive season. Corporates also were able to cut costs, especially the overhead costs, part of which clearly is a sustainable cost cut. And most churned out better results than expected. Also, we saw the raw materials costs moving up, but then for the corporates, for the manufacturing companies, the low cost inventory came to the rescue. There was a huge gush of liquidity thanks to these Robinhood investors, especially in India. We had about, I think, more than 1 crore new investors who came into the markets in the last 12 months. And probably their buying power or the liquidity which they had was much more than what FIs were pouring in a year. If you see last year, clearly the retail investors had put in more money than possibly the FIs in that last 1 year. So in a bull market, most people make money, since most of the people play long. So higher the wins, higher the confidence, and higher the liquidity, because you withdraw from other asset classes and start putting it in the asset class which is giving you that sort of a return. So it becomes a virtuous cycle. And again, FIs too couldn't miss this opportunity. They were not buying earlier, but then they came in later. So there was huge amount of liquidity which came in. So with new highs, market valuation also got extremely expensive. But still, we justified that, saying that the growth in FY22 will be a stellar one. But now I wonder whether this second wave, which we are seeing, which we are in the midst of right now, and we still haven't seen a peak. We may have seen some sort of a peak in Maharashtra and in Mumbai, but rest of the country, we still haven't seen the peak. So will the economy not really be affected due to the lockdowns which are being announced in various states now? I mean, we saw that in Maharashtra, then we saw in Delhi, we have seen in Karnataka, and I'm sure this will also be announced in various other states. And it will cover the economically important states over the next few weeks. And I mean, already we have economists talking of 1 to 2% lower forecast than what we were talking even 2-3 months earlier. But I'm quite sure that over the next couple of weeks, we'll see further downgrades. So there are a couple of things which I'm worried about right now. One is we may not see the huge jump post-opening of the economy, unlike last time. This time, I think the emotional drain is much deeper. And people may actually be fearing a third wave. I mean, last time we never really expected a second wave, although I mean, we had the learned people talking of the second wave, but most of us didn't really expect a second wave. We thought we were done with COVID. But I think this time that fear of third wave would be there in the minds of people. And again, like I said, I really don't know as to how much this emotional drain which we are going through right now will also affect the country's output overall. And analysts' expectations have been high based on the last 3 quarters. And for all you know, I think April to June quarter, the current quarter which we are in, could be a washout. May not really be as bad as what we saw last year, but will surely be a dent. And we don't know as to, I mean, what has happened to the bottom of the pyramid. In the sense, people, I mean, at the lower levels, in like I said, bottom of the pyramid, your businesses, which are those micro businesses and the small scale industries, I think they would be the worst hit in this pandemic. And whether they'll be able to bounce back fast, which again, I doubt. I mean, like last year, they were able to bounce back to a certain extent. And as they were coming back on track, they were hit by the second wave. So some of them may never really come back on track. And for the economy to grow on a sustained basis, I think everyone has to be taken along. And if you have this bottom of the pyramid not really being there, I mean, doing well, I really doubt whether the economy can really grow on a sustained basis. So FY22 probably we started off with high hopes of a repeat of FY21, but I think it may end with a whimper.
So continuing with what you mentioned about the second wave of COVID. So we have, like, as you correctly mentioned, we have already seen, a rise in restrictions and partial lockdowns across various states in the country. So what, according to you, will be the impact on various sectors and markets overall?
No, I think it will affect most of the sectors except possibly FMCG to a decent extent. Pharma, I mean, it will not really affect. It will be beneficial for pharma to an extent. Telecom, and I think a few other essential sectors will not be affected, but something like a automobile segment as well as white goods, I think they would get affected for a slightly longer period. Like I said, don't really expect a huge demand after the second wave, since people will really expect and that fear of third wave will be there. And again, like I said, we'll be emotionally drained. So I think all this will stop them from spending. Then the BFSI space could really see higher NPAs, since the pain would be there at the retail level and the SME micro enterprises level. And again, as of now, we are not seeing any directives from RBI or Finance Ministry yet to soften this blow. Though there could be some disruption for steel due to oxygen diversion, but I think clearly the high steel prices and the sort of demand which is there, I think that will cushion the disruption. So for industry overall, I think there could be supply chain disruptions if most states go into lockdown, like what we discussed. Till now, markets have been ignoring this due to the liquidity push. But we should remember that liquidity clearly is a friend of the trend. The day it reverses, for whatever reason, I mean, this liquidity will dry up more or less immediately. And the reasons could be any. I mean, it could be global market cues, it could be the rising yield, it could be earnings below expectations, it could be geopolitical issues. And when that happens, clearly the rich valuations which we are seeing right now again, will not provide that cushion for the markets.
So as you rightly mentioned that, some sectors would be impacted and some sectors would ride the wave. So
Right.
according to you, which are the sectors that you are overweight and underweight upon, and why?
See, I'm overweight on pharma, FMCG, telecom, power utilities, steel and metals pack, specialty chemicals, and underweight clearly on automobiles, white goods, and BFSI space. The reasons I've mostly explained earlier. But again, when I say I'm overweight, it means outperformance and not really moving against the market. So if the market comes down, don't really expect these sectors to move against the market.
Correct. So we have already seen a run up in steel stocks, lately, and
Right.
in fact, the entire metal index is also performing well. So, which stocks, according to you, one should look in the steel sector?
So it's really after a very long time that we have seen action in the steel sector. Clearly, it's a cyclical sector, so one needs to be ahead of the curve. As of now, we are in the midst of an upcycle. But again, I'm not too sure whether this is a beginning of a super cycle. When we talk of a super cycles last for a decade. So there have basically been two triggers for steel. One was China decided to shut smelters. Quite a few of them were illegal, as well as those which are not really adhering to the pollution norms. Now, they would come back with more efficient production facilities going ahead, but still, there would be some time gap. And secondly, due to this pandemic, there has been a huge liquidity push by the governments. And part of this is being used to create infrastructure. So this infrastructure is being created so that the recovery is a sustainable recovery. And again, infrastructure requires steel,
Right.
which you've seen along with the other steel consuming sectors, ensure that the demand really shoots up. And because of lower supplies, automatically the prices have moved up. And currently, I think we are close to those record highs in terms of dollar terms. Now, coming to the stock which I would prefer to look at, quite a few stocks have moved up. But then the one which I would recommend is Jindal Steel and Power. Basically, it's a major long steel producer in India, having a capacity of about 9 million tons. And they posted a record production for Q4 FY21, close to about 2 million tons. So they're close to that full capacity utilization. And they have, again, managed to successfully deleverage their balance sheet. And currently, it's about 25,000 crores. They were at about 40,000 crores plus, about 45,000 crores. This was way back in FY16-17. And that was the time, in fact, the lenders were, trying to take them to the cleaners at that point of time. And from those levels, they have managed to successfully deleverage their balance sheet. And again, now the news has come that they would also be selling off the power plant, because of which I think the deleveraging could be possibly another 9 to 10,000 crores. So looking at the way the steel sector is going, looking at the sort of performance which can be there for FY22, I'm really expecting an EPS of about 58, and looking at a price of about 580, which is about 10x, still comparatively cheap compared to the other players in this. And again, looking at the plans which this company has, or this group has, over the next 10 years, clearly is to move from 9 million tons to about 50 million tons, which will make it possibly one of the largest steel conglomerates in India.
Right. So we also had Mr. V.R. Sharma discuss about the company's plans and, the growth prospects sometime back here. So we had already understood what are the growth plans for JSPL. Also, so to end, Mr. Baliga, I would like to ask you, what are your top stock picks across sectors which our viewers should look at?
There are quite a few, but I would just discuss two of them. One where there's a decent amount of momentum as of now, which is Praj Industries.
Okay.
So Praj makes those ethanol plants, and currently the average ethanol is blended with petrol, and it saves those precious foreign exchange. And comes under that Atmanirbhar Bharat. So the current ethanol blending is about 6%, but government has increased that, the mandate, to 20%, which was earlier, the target was 20% by 2030, but now they've set 20% by 2025, which actually means that the capacity of ethanol has to be increased by 3x to achieve this. And because of which Praj management has stated that the inquiries have actually doubled in the recent past, and the minimum plant capacity also has increased. I mean, earlier, against 1x, it is now 1.5x. So their order book position is expected to grow in a major way. And in addition to ethanol, they're also into your high purity water, which is used by the pharma sector, which again is doing extremely well. They are into wastewater treatment. They also have a biogas, which is going to become a very big opportunity going ahead. In fact, the government is trying to spend about 1.75 lakh crores on this biogas overall over the next 3-4 years. So decent amount of those orders will come to Praj. Now, the top line of this company was stuck at about 1,000 crores for the last 10 years. But I think with these developments, we'll see a major breakout. Although the stock has moved up decently well in the recent past, I still see the stock possibly going to levels about 350 or so. So this was my momentum pick. And my second pick is more of a contrarian bet, ignored stock, which has not really been going anywhere since it got listed. It is IRFC. So this is the funding NBFC for, or funding corporation, I would say, for railways. Right. The IPO was at 26 and currently it's quoting at 21, just a couple of months. Now, if you look at the performance of the company, from FY16, it was about 24,000 crores of AUM. It's moved up to about 66,000 crores in FY20. And if you look at the December quarter, again, the AUM has grown about 26%. So, which means it's still growing faster. And they earn about 30 to 40 basis points over the cost of borrowing. And unlike any other funding agency, there's absolutely no risk of NPAs because you're lending to a government department, you're lending to railways. So the risk of NPAs is zero. And generally for companies like these, you normally look at the benchmark of book value. And I expect the book value of this company to be about 34 next year. So, I can expect the stock to move at least somewhere close to about 34 from the levels of 21. And the downside risk seems very, very minimal. And even from a dividend yield point of view, they've already announced a 1 rupee 5 paisa dividend just immediately after getting listed, within a month or two of getting listed. And I expect the dividend to be about 1.75, 1.8, for per year, which actually is an extremely good yield at the current price of 21. So you're getting a good yield. There's a decent upside without any downside. But at the same time, this is not a stock which will excite, most of the people in the market. So it could be a very slow mover.
Right. So thank you so much, sir. So to sum up, Mr. Ambareesh Baliga is overweight on sectors like pharma, telecom, steel, and FMCG. And whereas he is underweight on sectors like white goods, auto, and BFSI due to higher NPAs, which could be expected. The stocks which Mr. Baliga prefers are JSPL in the steel sector and Praj Industries, as well as the most ignored stock, as he has mentioned, IRFC. So thank you so much, Mr. Baliga, for giving us this great opportunity to benefit from your valuable insights. We look forward to having you more here.
Yeah, sure.